Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 3rd of December. Now over the weekend we've had quite a bit of news come out from the G20 meeting, and that's created quite a bit of sort of volatility for the markets to play catch up on this morning. Now the main bit of news I think which is affecting the markets is the softening or delaying of the potential trade wars between the US and China. So let's take a look at a few of these markets that we're keeping a close eye on in the trading room this week. Now, if we come and take a look at the Dow Jones future here, you can see the extent of the gap over the weekend. So it's quite a huge gap by comparison, but the direction of it is in the same direction as the immediate trend that we're seeing here. So let's take a look at this on the daily chart. The main thing we need to be looking at, of course, is what's likely to be happening to the markets here now, going forward this week. Often these gaps here tend to close at some point in time. So it leaves an open interest gap here that if we start to see any negativity in the markets, there is a potential here for the market to come back down and close this gap. However, if we think about the sort of context of, general sort of trend here on this time frame is looking extremely sort of choppy, but we've had a huge move up. We might expect some sort of retracement at some point in time, even before the continuation of this trend and of this move higher. Now, if we come down to the 4-hour time frame, we can see a little bit more structure here, and we can see the detail of this market. Now, at the moment, the market's sitting above 26,000. It's an area where there's been sort of key support and resistance before. It's a sort of a structure level through here. If I sort of zoom back, you'll see the context of this. There are a couple of other levels that we can see as well. So 25, sort of 850. And then there's not a lot in the way all the way back down here to the 2550 area, and that would sort of close the gap, and it also brings it back into the moving averages here, which is also an area where it takes out all of the heat of this overextension. A lot of traders tend to look for value entry areas around these sort of moving averages as well. So at the moment, we've got a huge extension on price where it currently is. So we need continued bullish news for the market to rally back up again and continue to strengthen up here to 26,200. And of course, by the time it gets up there, there is another support structure here, another key level that the market's got to get through. So for me, I'm looking at opportunities here to see how this market reacts. I think that this will see some sort of retracement throughout the course of the week, possibly down here to 25.80, 25 sort of 85 here. If the market can't hold this level, then I think we might see a drop down here into sort of 25.50. And if we can get down into these sort of areas, I'll certainly be looking at opportunities if the market starts to turn bullish again, because there's a lot of potential support here. It also brings it back into a sort of value area, and then of course we're looking for continuation long on this market. So let's take a look at, in fact, all of the US indices are looking extremely similar here. I prefer the Dow Jones out of the three of them. Now, if we come and have a look at a couple of currency markets, a couple here that I quite like the look of is Aussie CAD. Now, at the moment, we've got a lot of strength in the Aussie, and we've got an even stronger Canadian dollar at the moment. So it's not a great sort of play today. We've got sort of like equal sort of strengths between these two markets at this moment in time. But looking at the general structure of this market, the Aussie has been strong against the CAD here, as you can see, for, well, quite a long time. It's a number of weeks here. And the main trend is to the long side. So if we take a look at this on the daily, we can see that we've got a very good structured trend in the markets. We've got good moving average geometry and good convergence on the indicators. We can also see that the market has managed to trade through. It's respected the structure levels that we've seen here form in price. If I just sort of zoom out of this, you can see these structure levels have been respected many times before, but the strength of this market has pushed price through these levels. Now at the moment, the market's gapped up, it's opened up higher, and now we're pulling back into this sort of 98, sort of 97, 98 area up here, where there is a key structure point here in price. So a pull back into this level is the market's certainly going to find a bit of support here, and if this support can hold, then potentially it could be a potential turning point here for the trend. If we come and take a look at this on the 4-hour time frame, here on the 4-hour you can see these levels a little bit more clearly. Here's our 97 level here. You can see where the market gapped up and opened higher just above 97.50. So to close the gap, the market's now sort of retraced back into the moving averages here. It's actually now officially closed this open gap, and we've got support underneath price. So if this is an area where the market can find support, then we could be looking for a continuation of this trend to the long side, and we'll be looking for longs once the market sort of can prove that it finds support around this area. Now another one that we like the look of here is Kiwi against the yen. Similar sort of story here, that the markets have gapped higher. If we come and have a look at this on the weekly chart, we can see that the trend here on the weekly, although it's not a great structure of a trend, the sort of direction of the trend has certainly changed. We've broken above previous lower highs. The trend certainly is now long on all time frames on this market, and the market has now broken through a key 78 level. So you can see this sort of 78,000 level here on the weekly. Market's sort of broken through this and it's gapped above it over the weekend. So if we come down the time frames and take a look at the daily again, if I zoom out of this, you can see 78 again. Very key support and resistance structure on this market. Last week, the market was finding resistance under or resistance above this this level, so it wasn't able to get through it. But over the weekend, this weekend news has allowed the market to break above it. So a bit of a pull back into this sort of level, which I've got marked in here on the daily chart just above 78,000, so about 78,020. But essentially it's these highs I'd be more interested in here on the daily. So the market sort of above this area here, any sort of support to pullbacks into this area could be looking like nice areas for value entries to get sort of positioned. So if I mark this level on the 4-hour time frame, so we've got around 78 sort of 20 here on the 4-hour time frame. We can see that sort of last test here on the trend long. We can also see that the level coincides with the moving averages as well. We've also got good convergence on the indicators. Now, again, with the overextension where the market opened up, I'm preferring a bit of a retracement in here. So I'm looking for potentially a sort of a pull back into this area, back into this level, back into the moving averages. If the market does that, and finds support around this area, then I'll certainly be looking for longs above that, looking for longs for the continuation of this trend on this market. So there's a few markets there that I'm keeping a close eye on in the trading room this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.